Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Hello everybody, I'm Chuck Gibson, and this is Taking Stock, episode number 58. Welcome, Art Jarvis.
Hey, how are you doing today?
I'm well, sir. You know, we continue to celebrate this second, is it the third wind of summer? It's at least the second.
Something like that, yeah. I mean, today's a beautiful day, though, so I'll take it.
Yeah,
So,
a gorgeous day.
gorgeous.
Or, as we said earlier, just off the recorder, it's a beautiful day in the neighborhood.
It is a beautiful day in the neighborhood, Mr. Rogers.
Yes, sir. Yes, sir. Well, now that we've established that it's a beautiful day, man, we better get right to it.
Yeah.
What's going on in the in the marketplace, but first and foremost, I gotta throw it at you. What in the world is this thing again? Government spending bill, and we're in the 11th, 12th, or 13th hour or something right now with no bill passed.
Yeah, I mean, tomorrow's D-Day, or Friday's D-Day, right? Friday's D-Day, and, you said it, it's here we are again. I mean, this just seems to be a thing now where we just can't get any kind of budget bill passed or anything like that, and, then now we're talking about another stopgap, so, I say another with my eyes rolled up in my head, and it honestly kind of makes me nuts. You got two sides of the equation sticking to their guns, and it sounds like they met yesterday and didn't accomplish a whole lot, other than they figured out that they don't agree with each other. So there's a shocker. And we could veer off heavily on the politics of it, and we're going to touch on it because I was impressed when you and I were just talking about it, offline. And I told you, I was impressed with Art Jarvis listeners. I was impressed. Well, you're one person.
I got a whole bunch of historical facts and information, trivial stuff about the sports world, but Art actually pays attention to what's important in the world.
Once again, I don't know about that.
Well, anyway, what I wanted you to do, though, in all seriousness, is share a little bit, because we said again, here we go again. Government spending bill is going to require a stopgap. The government's going to be shut down for something. So it's happened before. This isn't new. And you were talking about some of it from your own, just your own memory, but you did look up a couple of things. So factually, longest shutdown that we're aware of when the government's gone through this process and the two political sides can't come to terms.
Yeah. Well, the longest one I'm aware of, and again, most of these are, they are. All the three I can think of are within my career. But the longest one was actually back in 2018, 2019. So that was December and through January.
Right.
But it was 35 days, and that was under...
that was during the Trump's first administration.
Right, exactly. So that's... As far as I'm aware, that's the longest one we've had. That was over a month long.
And you said
it's a long time.
35 days of shutdown.
Days.
So this is a show taking stock. Yeah. So looking back at that 35-day shutdown, and it was during your career, in this financial advisor world and taking care of your clients and their retirement planning and all that stuff. What do you recall, if anything, about the impact, really, on investing and the marketplace when that was all said and done? 35 days. What can you recall about the impact?
Well, if we're going to go with after it's all said and done, I would say the impact wasn't that big of a deal. Yeah, I mean, but the problem is as we have talked numerous times, is about uncertainty, right?
Sure.
So guess what? Here we are, and more uncertainty. What's this going to look like? How long is this going to be? Is it going to be a thing? Number one.
Right.
But number two, if it is a thing, how long is it going to be? What impact is it going to have? And then you have the Trump administration saying that if we don't get something done in time, that he's going to start firing people. Well, Okay, so that's a little bit different rhetoric than in past times. But you know, the one I am aware of is back in 2013, which would have been Barack Obama, correct?
Correct.
That one lasted
second term.
Second term,
Right.
right? So that one lasted 16 days. Not that that's the third longest one that I'm aware of. But they say, you know, the statistics say that shaved about $24 billion off the U.S. gross domestic product in the fourth quarter of that year, and which is about 0.6%. But you still got to make the point that, okay, you come back into the first quarter of the new year, that everything fires up again, right?
Well, so you got me curious because you were able to cite a specific fact about what they said it shaved off the gross domestic product. So in that 35-day shutdown during 19, I guess, you know,
right.
2018 December into January of 2019 for a total of 35 days during the Trump administration at that time. How did that impact the GDP?
Yeah, and I don't have specific numbers for that, but I will say that was 5 years later, it was
different.
Twice as long.
Right.
So I would say it was more substantial.
Yeah.
But here's
well, I was going to say, in fairness, because I don't want to during Barack Obama we lost 24 whatever GDP and it's about 6% versus what happened during Trump.
Yeah,
but that was
6.
Again, those 16 days in 2013 during a Barack Obama administration, there was an impact again from one of these that we may be facing right now, shutdown of the government. Longest Trump 35, third Obama, and you said, as we were discussing this before, that it was during the Clinton administration that they had a
21 day.
21 day.
Right. So that's the other thing. Yeah, the other thing interesting to me is you look back at 2013, the sticking point between the two parties why they weren't able to get anything done was the Affordable Care Act.
And here we are.
And here we are again, we're having the same conversation. The Republicans want a clean bill, which, will stick away from politics, but I'm a big fan of clean bills, okay? The Democrats are fighting for a few things, not a whole bunch of things, but the biggest one really is, once again, Obamacare or the Affordable Care Act. They want guarantees and they want to make sure money is put that direction and things like that, and that's a huge sticking point. Here we are. 12 years later, it's the same sticking point.
You want my vote, you give me this.
Yeah.
These are conditions that, and both parties over the years are guilty of doing that.
Sure.
It would certainly, I like the fact that, the term is clean bill. Mm-hmm. Wouldn't that be nice?
I just, again, I'm not a politician, I've proven that, but, it's just to me, I'm a keep it simple kind of guy, okay? If we're going to do this bill, whatever this bill is, and that's what this bill's for.
Right.
But every single bill is filled with all of this pork and all these things that have nothing to do with the original bill. Right? It's mind-numbing. It really is. There's just, if you want to get this deal done, you got to build me a bridge over across this river or something. Whatever the deal is. And it's just my personality, but I just would much prefer to see much cleaner bills. So I kind of do lean toward that thing, but I am also, and it's interesting to just take this week. Last week, I think we were down 3 days and up 2 days. It was no big deal. This week, yesterday we were up.
Which was Monday.
Today, Tuesday, we're down at the moment, like 0.17%, so nothing to get excited over, right? It's a little bit of this, kind of feel the same way I seem to feel. It's a little bit of this, ho-hum, here we go again, right? It's like, okay, they're going to do this, and they're either going to come up with an 11th hour decision, or they're going to slip in and shut the government down for a period of days to weeks. right? Which, and at the end of that period, all the government employees are going to get paid retroactively. So even if it does impact our economy for that period of time, these people are going to get a whole bunch of money, that covers, they're going to get, first of all, they're going to get a unscheduled vacation, number one, and number two, they're going to get all their money they have coming to them at the end of it. So, anything maybe they put off during the fourth quarter here is probably going to show up during the first quarter of next year. So it's kind of a yawn, but I just think it speaks to a greater concern that we just, as this is a Captain Obvious response, but we just do not have the ability to do what we think is right overall for the American public.
So there's a side issue which we spent a lot of time on in taking stock 2 weeks ago, that I have to ask the question regarding the feds, and any inclination that they said probably going to see the dropping of the interest rates, another decrease, maybe one before the end of the year,
right?
Maybe even two.
Yeah.
So if there's a government shutdown, let's say that this gets ridiculous again and goes 30 days.
Yeah.
So that would take us, through the start of November.
Right. Any chance that impacts?
Sure.
100%. Yeah. I mean, if anything else, that makes the probability of a rate cut even higher.
Okay.
But here's the answer.
Well, that was the question. How do they respond to that?
Well, I mean, if you're talking about taking percentage points or partial percentage points out of the gross domestic product or the growth in the economy, you're talking about taking billions of dollars out of the economy during that period of time. Yeah, you're talking about slowing things down even further if they are slowing down, which I still submit they are not. But so yeah, it makes. But here's the and that's a good question, because here's the very interesting thing to me is I told you how I felt about the interest rate.
By the way, I marked that down. That was a good question.
Yeah, good. Yeah, but that's a gold star for you today. But yeah, it's we cut rates a quarter point. It was a 99% foregone conclusion, so everybody pretty much got what they wanted. And then they said, hey, and guess what? We might have 2 more rate cuts before the end of the year, which to me made, I kind of shrugged my shoulders like, why? But here's the interesting thing here more recently is you're starting to hear a lot more rhetoric from some of the Fed governors that we might want to ease up on this whole rate cut thing. So here we are, just 2 weeks removed from a rate cut, and it even goes back further than that. But let's just go from there. We cut rates. There's probably going to be another one or maybe 2, and and now we're talking about, hey, maybe we might want to ease up on these rate cuts here. It's like, well, it's been 2 weeks. I mean, that's a lot of ups and downs. That's a lot of changing of positions for me in 2 weeks, right? So, I mean, that's the interesting thing. Again, it falls under kind of like we talked a couple weeks ago about unemployment numbers and things like that, or employment numbers, which, by the way, we're supposed to get the employment numbers this Friday, but if the government shuts down, we don't get the employment numbers. So that's another example of uncertainty, because now if the government shut down, we're not getting our economic numbers. If we're not getting our economic numbers, we're kind of flying in the dark a little bit, right?
Right.
So that's add that to the equation. But no, the whole interest rate thing, again, I will still submit interest rates, unemployment, gross domestic product, interest rates, corporate earnings, everything in my opinion look good. I just don't see the reasoning behind pushing down on the gas pedal a little bit further.
Well, I have a question, believe it or not. Sometimes I like to, almost all the time, this is like a forum for you to share the insights, and take stock out loud for the listeners. And I the questions arise from what you talk about. I actually came into today, I said, I have to ask Art this question. And we've already been touching on those words again. Fear and greed. Mm-hmm. And I'm glad you said right off the bat uncertainty, because that was in the back of my head. And I was like, what's that? Uncertainty. So fear, if fear and greed, here's the question. Are you ready?
I'm ready.
Okay.
Great.
So if fear and greed, as we know, drive the market, right?
Correct.
Then, and Art Jarvis and Jarvis Global Investments is a numbers based.
Very much so.
You drive by the numbers.
Right.
So the question ultimately is, if fear and greed is what drive the people and drive the market, but you're going by numbers, what are the numbers? And it comes to mind yesterday because of this whole thing with the potential government shutdown. What the question comes to my mind yesterday. So like, if fear and greed are it, then what are the numbers that you're looking at that say we don't need to worry about fear and greed right now?
Right.
So I think, and it's kind of funny because you just ended your last statement. It's a forum for Art Jarvis, but I want you to answer the question anyway. You kind of ended that forum just now with, this, that, and the other thing, GDP and everything else are all kind of in line,
right.
And we don't need to do these things
Yeah.
out of fear and greed. So for the people listening, what are the numbers right now telling you that you can share with our listeners and say, calm down?
Yeah, I mean, if you're asking, what, like you said, the 5 things I just rattled off. So,
right.
So interest rates, gross domestic product, corporate earnings, unemployment, inflation, right?
Right.
So here's the thing. So those are the ones I watch. But here's the more important thing is I'm watching the trend in those. So if we have a short-term event, and let's call a government shutdown a short-term event,
please.
Generally what happens is if you're looking at the trends in these different indicators, and even way more than those 5, but those are the 5 I think are at the top of importance, what you might see is a small blip down, but as soon as things get better, you see that stuff come right back up the trend. Okay?
Right.
Now, if you head into 2008 recession, guess what? That's not a blip on the screen. That's a whole different animal.
It's a little longer term.
Yeah, and so then that's, I'm less concerned about a short-term blip than I am something that's, a 15-month blip. That's clearly a different animal. But, it's, lost my thought. Go ahead.
Well, okay, I'll interject a question while you try to regather that one thought. Among many, just for the record, I'm sure.
It's a senior moment.
So, employment numbers, which just came out, before our episode 2 weeks ago. Well, actually, they came out a little bit before that, so a month ago, those employment numbers. So I would argue, because you're saying, hey, GDP, employment, interest rates, inflation, these are all things that are like, the trends are good. But I would question them, but the employment numbers were surprisingly bad. Mm-hmm. They missed by a big mark. We spent a lot of time talking. We don't want to go through that whole thing again because we covered it. Right. But they missed by a wide margin and created, even for Art Jarvis, like, well, wait a minute, what's real?
Well, there's your problem. So my question to you would be, did they? I mean, the question becomes, which one is right? Okay? I mean, did they take that big, huge of a dip, or is there something else going on there?
Okay, so it had a little less weight, is your explanation. Because if I'm saying to you, why do you say the employment numbers are okay? Well, because it didn't carry the weight it would have if it wasn't like questionable. Mm-hmm. I guess that's the right word. It was a questionable reporting because it was just so far off from what they forecast.
Yeah, but then you've also had other employment numbers since then that have been much stronger than what they were expecting. So you're sitting there kind of going, okay, is it weak or is it strong? Yeah.
Well, I heard 2 things today I just want to ask you, just for a side note. I mean, not to be negative Nelly, But so the airline industry, according to the big chief wizard of sorry, going to name it, Delta.
Yeah.
So apparently he's a spokesperson for all the airline industry now, and his name escapes me. But anyway, is he the CEO? Yeah, I guess he's the CEO for Delta, and he spoke yesterday. Did you hear anything about that?
I did not.
Anyway, so he's got a very negative outlook about the airline industry.
Okay.
He said, yes, we Delta and we this and we that, like the three big airlines that we would always think of. These things are going to keep us in good order, but every other airline, he projects, is going to suffer a losing battle. They're going to have losses.
Yeah.
So, and then the other thing was, shoot.
I mean, which is interesting because look.
Now I lost the thought.
Yeah, right there. Now my turn. You think about it.
Go ahead.
Yeah, but I mean, which is interesting because a couple of things. Ticket prices in my are higher than they've ever been. I don't fly on.
Well, that's the Delta CEO said this is the reason Delta, American, and Southwest are going to be okay. Because their pricing for the best seats and the premiums. Yeah. Pricing will keep them in the black.
Yeah, I mean everything costs extra now. If I want a little extra leg room, or it costs extra. If I want to take this bag, it costs extra. But there's even you look at like a Southwest who, even they're starting to come up with a bunch of rules and different things. So, but airline is it's ticket prices, and then the biggest thing for an airline obviously is fuel costs. So the oil. What's oil done? Oil for the last a bunch of months has been relatively stable, right? So it's interesting to me that he's coming out saying, "Oh, we're in trouble." Well, we'll see. But
well, the other negative Nelly piece, which I was able to regather my thought here,
okay,
was, and thank you to you because you just reminded me of it when you said oil. So Exxon announced cutbacks.
Yeah.
Of
2,000 or 3,000 jobs.
They said it amounts to 3% of their workforce.
Okay.
And it's 2,000 or 3,000, something like that, across the globe, not here in the U.S. only. But it was interesting. You're going by numbers. You're looking at things. And again, I'm not trying to be a negative Nelly because I lean, in all honesty, Art, I lean with you. I think that our economy is doing pretty well without being in any way, shape, or form an expert or knowledgeable. I just watch and see what's happening around us. But again, there's, the Delta CEO says the airline industry is going to be in big trouble, and Exxon is, restructuring, does that create uncertainty? Does that create fear? Or does that say, hey, they're out front, they're restructuring to be stronger? Well, how do you look at that?
So there's probably a lot of layers to that onion, but the one that kind of pops to the front of my head is technology. So if you start talking about technology and how that's in, especially that industry, or you're talking about artificial intelligence. We talked a few weeks ago about, artificial intelligence wasn't going to necessarily attack the blue collar worker. You might be more concerned if you're one of the white collar workers, because it's going to take some of these repetitive tasks and things that take a while to do, and they're going to do them very quickly for you, right? So I wonder how much of that is impacting, those kind of job cuts and things like that, like you said, across the globe. I mean, it's, how many businesses do we run into right now, and they're talking about how they're using artificial intelligence? I mean, it's I hear it every week, right? And if I can bring a computer in and do my job for me, and it takes my way of thinking things and plugs it in, and it can do it in 30 seconds, what takes me a week, then guess what? I'm replaceable. So I mean that's kind of where I step in. I mean, let's be clear, Chevron and Exxon, and they're not hurting. Those guys are literally making, well, I don't know what the number is anymore, but I know go back, they're making 50, 60, 70 billion dollars a quarter. Okay, so they're not going out of business. Let's be clear.
No, right.
Right. So
I don't think anybody thought that.
So I'm not worried about that. So that's why it kind of drives me to, okay, is this more of a productivity, a technology, and artificial intelligence kind of thing going on? So I guess that's my cut on it. Like I said, there's probably way more layers to that, but yeah, I still submit to you, if I'm looking at the economy, I'm not shaking in my shoes right now. Okay, it's good.
But the numbers that are being reported, the GDP, what the current interest rate is, where the inflation numbers are, you're comfortable with where the employment numbers are. What's the other one? Corporate earnings.
Corporate earnings
numbers. So those top 5 things to recap what you said, those numbers tell you, and you share with our listeners that those numbers are all trending in upward,
correct,
or downward, if that's it. We want lower this,
in a positive way.
They're trending in the right direction for a strong and healthy economy, and a strong and healthy economic outlook.
That's exactly how I feel. I mean, look at gross domestic product. We're at 3.3% of gross domestic product. Nothing wrong with that. I'll take it.
Well, you said 3, that's your favorite number.
Well, 3 is my favorite. Yeah, 3 number on inflation. Yeah, and we're at what? I mean, we just got our favorite indicator this last week, the PCE, the Personal Consumption Expenditure Inflation Indicator. But yeah,
I'm never going to remember that.
It was fine. It was perfectly fine. So it's in line and it's below 3%, and I'm good with that. Like we had got our interest rate cut, right? As soon as we got our interest rate cut, it's like, what are you going to do for me now, right? It was interest rates. We got our interest rate cut that everybody was expecting, and now it's like, well, what have you done for me lately, right? So that's kind of why the markets are kind of gone. It's like, what's the next thing I really want to focus on? Well, now the next thing we want to focus on is the government shutdown. How long is that going to be? What's the impact going to be, and things like that? And who's going to have to give up what to get it done? And and remember, they're still talking about a stopgap.
Well, you know what? And I'm glad you mentioned that again, because as we get to the final couple minutes of episode number 58, stopgap. So that's like when we said that it lasts for 16 days or 30 days or, a week or whatever the shutdown. So there's not a stopgap during the shutdown. Shutdown is a shutdown.
That's right.
And a stopgap might be something they come to agree on while there's a shutdown and while they still have not come to an agreement on a bill.
Yeah.
All right.
Let's say your household, you have to come up with a budget for 2026, right?
Yes.
And you don't have it yet.
No.
Okay. But if you don't get something done here real quick, you're in trouble. You're not going, and especially if you're not making your bond payments or your treasury bill payments and things like that.
Right.
That's not good. Okay.
Yeah.
That's very bad. So what you do is say, hey, I'm going to get it done. Not quite sure when. I'm going to get you a plan. I'm going to get you a budget, but I need you to give me some money until we get to that point, right? To keep these certain things going, and that's what's going on right now, and it's just continue. And we're to the point that we don't have a plan. We hit this time in the process, so we got to get we shut down the government, or we do a stopgap, and then we continue to fight about what the budget's going to be. So that's where we are right now.
Yippee.
Yeah, I don't put that under one of my yippies, but it's my, again, I'm a simple guy from Loveland, Ohio. It's mind-numbing to me. It really is. Our inability to actually try and work together is just mind-numbing to me. So
that we try to end each episode on some sort of positive note or piece of advice. I was going to say, it's a good place to end it right there. But I decided to ask you another question just to put you on the spot.
All right.
Close it out.
All right.
So how long does Jerome Powell have?
It's March or April. In my world, I don't see a world where he continues at his job.
Well, and the reason I did that, and especially for the listeners, because earlier in this conversation today, you talked about, President Trump has said, I want this bill to get done. We don't need to be shutting down the government. And he's, he's getting to where he's going to fire somebody. Well, you can't fire the senators. You can't fire the people in Congress.
Well, let's take it to
the bill has to get through there. Who can he fire? So it reminded me. I said, well, the only person I can think of right now that he's got the axe out for is somebody named Powell.
Yeah, I mean, again, I've made pretty clear how I feel about Powell. I don't think he's done a great job, to be honest with you, especially recently. But then,
well, I understand that the president is going to call you and say, "Should I really let him go?" And you're going to give him the
that phone call's not happening. Yeah,
no, okay.
Yeah, but I mean, but the other thing is they just don't see eye to eye, right? They don't have what I would call a good working relationship, right? So,
sure.
And the Trump administration is in the process of trying to load up the Federal Reserve with people who are going to be more cooperative with them, right? So
right.
I don't think that Jerome Powell, fits that bill.
All right. Well, I'm going to let you wrap it up on a positive note.
Stick with the plan.
That's it. It doesn't get any better than that. Art Jarvis, thank you. That does conclude Taking Stock episode number 58. Really, thank you so much for joining us today and sharing your insights.
No, thank you, Chuck. Appreciate your time.
Until next time, that is Taking Stock episode number 58. Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.